Welcome, everyone. In today's video, we'll be diving deep into the essential technical skills and tools that every professional should master in the fields of accounting and finance. I'm excited to guide you through these powerful resources and practices that can elevate your work, streamline your processes, and drive better financial decision-making. So let's get started. Before we begin, let's quickly walk through what you'll learn in this video. First, we'll take a look at some of the most widely used software in the accounting and finance world. Next, we'll explore how to analyze financial data effectively. Then, we'll discuss the fundamentals of building robust financial models. Finally, we'll wrap things up with some key takeaways to help you put these skills into action. With that overview, let's dive right into our first topic, essential software tools. Let's kick things off with a cornerstone tool for small and mid-sized businesses, QuickBooks. QuickBooks, created by Intuit, is a user-friendly accounting software designed to manage key financial tasks. With QuickBooks, you can handle everything from invoicing and tracking expenses to managing payroll and keeping tabs on your inventory. The platform makes it easy to create and organize financial records, which is crucial for accurate reporting. Setup is straightforward. You'll start by creating a new company file and setting up a chart of accounts tailored to your business needs. Once you're set up, entering transactions such as sales, expenses, and bank records becomes routine. Invoicing is also streamlined, so you can quickly create and send bills to clients, keep track of payments received, and monitor outstanding accounts receivable. And most importantly, QuickBooks generates detailed financial reports like profit and loss statements, balance sheets, and cash flow statements, giving you a comprehensive view of your business health. We've just discussed the basics, so next, let's look at some advanced functionalities QuickBooks has to offer. Beyond the basics, QuickBooks provides advanced features to support more complex business needs. With its payroll module, you can easily manage employee compensation, including automated tax calculations and year-end filings. Inventory management tools are built in, so you can monitor stock levels, track associated costs, and analyze sales trends with minimal effort. QuickBooks also supports integrations with other essential business tools. Think CRM systems, online payment gateways, and e-commerce platforms, making it a powerful hub for all your financial information. Now that we've covered QuickBooks, let's transition to another must-have tool, Microsoft Excel. Excel is a staple in accounting and finance, so much more than just a spreadsheet. It's an incredibly versatile tool for organizing data, running analyses, and even building financial models from scratch. At its core, Excel lets you use formulas to perform calculations automatically. Functions like sum and average are just the start. You can also apply formatting to highlight important information, use conditional formatting for insights at a glance, and validate your data to minimize errors. Charts are another key feature. They help you turn raw numbers into clear, impactful visuals. And when it comes to dissecting large datasets, pivot tables are the secret weapon. They let you quickly summarize complex information, helping you draw conclusions and spot trends that inform business decisions. But Excel's power doesn't end with the basics. Let's explore some of its advanced capabilities. As you grow more comfortable in Excel, you'll discover a suite of advanced features that can take your analysis further. Advanced formulas, such as VLOOKUP, HLOOKUP, index, and match, allow you to find and manipulate data across complex sheets. Array formulas supercharge your calculations even more. If you handle repetitive tasks, Excel's macros and VBA, Visual Basic for applications, come to the rescue. These tools help automate workflows, save time, and reduce the potential for manual errors. Plus, Excel includes specialized data analysis add-ins like Solver, the Data Analysis Toolpack, and Power Query, each providing powerful ways to clean, transform, and interrogate your data. Let's continue to our next set of critical software suites, starting with Oracle Financials. Oracle Financials is part of Oracle's comprehensive ERP solution, popular among larger organizations. It offers a robust platform for every aspect of financial management. Think general ledger accounting, managing payables and receivables, tracking fixed assets, and monitoring cash flow. Getting started, you'll want to familiarize yourself with the Oracle interface. Navigation is intuitive once you learn the menus and functionalities. You'll configure the chart of accounts, manage journal entries, and generate detailed reports with just a few clicks. On the payable side, Oracle Financials lets you handle invoices, make payments, and ensure your records reconcile with vendor statements. On the receivable side, you can track incoming payments, handle customer collections, and keep your cash position crystal clear. And for organizations with complex needs, Oracle Financials offers several advanced modules. If your business needs go beyond the basics, Oracle Financials can support more advanced requirements. The Fixed Assets module, for example, automates tracking for acquisitions, depreciation schedules, and even asset disposals, supporting accurate long-term financial planning. Cash management tools help you monitor liquidity, manage bank reconciliations, and optimize your organization's overall cash flow. Plus, Oracle's powerful integrations connect seamlessly with other modules, such as procurement or inventory, streamlining your entire workflow. With Oracle Financials under our belt, let's move to SAP, another major player in enterprise solutions. SAP is a powerhouse in enterprise resource planning, providing integrated solutions for businesses of any size, especially those with complex operations and global reach. With SAP, you'll manage financial accounting, control costs and profitability, oversee assets, and even handle human resources, all within a single centralized environment. Learning to navigate SAP means understanding its interface and transaction codes. Within the Financial Accounting FI module, you'll configure accounts, track payables and receivables, and ensure complete transparency of your finances. The Controlling CO module lets you set up cost centers, manage internal orders, and perform deep profitability analyses to inform your company strategy. SAP also offers several advanced customization and reporting features, so let's explore those next. SAP shines with its ability to integrate seamlessly across business modules. For example, you can connect financials with supply chain management, sales, or procurement for a 360-degree view of your company's operations. Advanced reporting is a breeze with SAP Fiori and SAP Business Objects, giving you access to real-time analytics and customizable dashboards. And for organizations needing more tailored workflows, SAP provides customization through ABAP, its proprietary programming language. This means you can adapt SAP modules to your unique needs, automating and optimizing even the most complex business processes. Now that we've covered the essential software, let's pivot to the next foundational skill: data analysis. Let's begin by exploring the three main types of data analysis you'll encounter. First is descriptive analysis. Here, the goal is to summarize and describe the key features of a dataset. Think of it as painting a clear picture of what's happening with your data. You'll commonly use tools like the mean, median, and mode to identify central trends, while measures such as standard deviation and variance reveal how spread out the data is. Next, we have inferential analysis. This type moves beyond summarizing data. It helps us make predictions or inferences about a larger population based on a smaller sample. To do this, techniques like hypothesis testing, confidence intervals, and regression analysis become essential, allowing us to draw meaningful conclusions even from partial information. Finally, there's predictive analysis. Here, the focus shifts to anticipating future outcomes by leveraging historical data. Using advanced tools like time series analysis, machine learning algorithms, and forecasting models, we can spot patterns and trends to make educated guesses about what's next. Now that we've outlined the key ways to analyze data, let's dive deeper into the process, starting with how we collect and prepare information. To understand how data analysis drives value, let's walk through its core stages. We begin with data collection. Gathering data is the foundation of all analysis. This information could come from financial statements, market research, or internal systems. It's crucial not only to acquire data but to ensure it's accurate, complete, and consistent. Otherwise, insights may be flawed. Next is data processing. Raw data nearly always needs cleaning. This means removing duplicates, handling missing values, and correcting errors. Transformation comes next, where data is normalized, aggregated, and formatted for analysis, ensuring it's ready for deeper exploration. Data visualization follows. Tools like Excel, Tableau, or Power BI allow us to turn data into visualizations, charts, graphs, or dashboards. With these visuals, analysts can easily spot trends, patterns, or anomalies that might be missed in spreadsheets alone. Finally, decision-making. The ultimate goal is to generate insights that inform strategic choices, budgeting, and forecasting. By analyzing scenarios, we can develop and evaluate financial strategies based on solid evidence. With these stages in mind, let's shift gears and explore how financial modeling builds upon these analytical practices. Let's move into financial modeling, a toolset crucial for planning and strategy in any organization. First, let's discuss the purpose. Financial modeling helps us predict future performance by analyzing historical data and making informed assumptions. It's used for forecasting to estimate how a business or investment might perform under different conditions. Modeling also supports valuation, helping determine the worth of ventures, and provides decision support for business planning. Now, let's cover the components. Effective modeling starts with sound assumptions. Factors like revenue growth rates, cost structures, and capital expenditures are defined up front. The next building block is financial statements. Models typically project income statements, balance sheets, and cash flows forward in time. Finally, it's important to identify key drivers that influence performance, such as sales volume, pricing strategies, and operating expenses. Understanding these components sets the stage for the step-by-step creation of a robust financial model. Let's break down the essential steps involved in constructing a financial model. Start with historical data. Gather and thoroughly analyze past financial records to inform your model. Reliable history forms the foundation for realistic projections. Next, develop assumptions. Base these on historical trends and current market conditions, ensuring that each input reflects the economic environment you're operating in. Model structure comes next. Map out how different inputs interact. Organize your sheets so the model flows logically from inputs to calculations to outputs. Formulas are then used. Excel formulas connect your inputs to projected financial statements, doing the heavy lifting for calculations and forecasts. Finally, validate the model. Regularly check that it operates as expected, spotting any errors, inconsistencies, or inaccuracies before decisions are made. Once your model is set up and validated, it's time to use it for scenario analysis and valuation. Advanced financial modeling isn't just about predicting a single outcome. It's about exploring possibilities. Let's start with scenario analysis. Scenario analysis evaluates how different assumptions impact financial performance. By using sensitivity analysis and what-if scenarios, you can test the effects of variable changes, helping leaders prepare for best case, worst case, or average outcomes. Next is valuation. Determining a business's intrinsic value requires rigorous analysis. Common techniques include discounted cash flow, DCF, comparing similar companies, or analyzing precedent transactions. These methods help investors and managers make informed decisions on whether to invest, divest, or hold. With scenarios and valuation complete, models move into crucial budgeting, forecasting, and decision-making functions. Here's how financial modeling directly supports organizational success. First, budgeting and forecasting. With a solid model, you can craft detailed budgets for revenues, expenses, and investments, and forecast financial outcomes over months or years. Strategic planning starts with well-founded projections. Next, decision-making. The model's outputs guide critical decisions, whether for new investments, reorganizing finances, or operational changes. Communicating these results effectively through reports, dashboards, or presentations keeps stakeholders informed and aligned. As we reach the close of our presentation, let's review what we've covered. By mastering essential technical skills and tools, you can significantly elevate your impact within any accounting or finance role. Whether you're leveraging powerful software, conducting rigorous data analysis, or building models that drive business strategy, these capabilities boost both your efficiency and your ability to make informed, strategic decisions. Invest time in developing these proficiencies. They are not only valuable for your current organization, but also for your ongoing career growth and success. Thank you for taking the time to join me today. Stay curious, keep learning, and don't hesitate to reach out if you want more insights in the future. Best of luck on your finance and accounting journey.